Hello everyone, Sam is here from myforexmagicweb.com, making this a small video to show how to determine your target. Okay, so let's get started. I get this question a lot of times, so I says, okay, I'm gonna make a video. Now, this is a trade. I took it on the 20th, I think Wednesday, Thursday, Friday, yeah, Wednesday. Pound Uzi, right? And this is off of my 20-minute chart, and here's the entry. This is the setup, and this is the entry here. So sell entry, you can see SL move here, and price went down all the way here for 190 pip. The question is why I hold it this trade all the way for 190 pip, and why I didn't close when it was bouncing from here, over here, over here, right? What make me hold the trade to go all the way for 190 pip? That's a lot of pips, right? Usually that don't happen, but there's a reason for that, and that's what I want to show here. Okay, so let's get started here. The pound newsy, the first thing to understand is that each and every pair, they move differently, right? Pound Aussie move differently than pound Aussie, and then Euro USD move differently than pound USD, and or pound franc or yen pairs move differently than pound pairs, and they behave differently. And when they behave, the most important factor in behaving is the daily range, how far or how much, how many pip each and every pair posts in one single day, right? In 24-hour day. So for example, if we go and take a look at this, this is pound newsy, right? This pair, and this was my entry here, the same trade I'm showing here. And if you look at this indicator, and you can find yourself so many indicators out there, and if not, then you just calculate from high to low. So here you can see this indicator is telling me that this pair, pound newsy, move average, 60-day average is what? 298 pip, right? From the top to bottom in one single day in 24 hour, almost 300 pip, right? Then if that's the case, and if I get an early entry, then I can easily, pull maybe 150, 200 pip trade out of that 300 pip move, right? It's possible. But if the pair moves only 50 pip, can you do that? Obviously not, right? There are pairs. For example, this Euro franc, right? This is also a pair, and then you look at it and you see that, oh, yeah, okay, this weekly chart is moving, right? It looks like it's moving. It's just trending very nicely. But an average daily range of this pair is 43 pip. And the whole 24-hour, it moves only 43 pip from top to bottom in one day. So how many pips you can make out of that? 5, 10, maybe? Maybe even not even that much, because by the time you get the setup, the 43 pips are gone, right? It has traveled the whole day amount of pipage, and there's nothing more, and then you have to wait for the next day. Or here, for example, your USD, if you look at that, the 60-day range is 113 pip. So, it's much better than Euro franc, but much, much less than pound Aussie. Similarly, if you look at the other pairs, for example, pound Aussie, we're going to take a look at that later on. So that also moves like 270, 280 pip in a single day. The daily range is that much. So this is why it is very important to choose the right pair to trade, and then learn that pair. Pick up the pair, few pairs which moves, the currently moving very, a decent amount of pippage, at least 100 or more, right? Not like Euro franc, but 150, 200 pip daily range, and then learn them, how they behave, and how harmonic patterns, Elliott wave, what support, resistance, trend lines, what's happening, and then trade them. It will be much, much more lucrative. So let's go back to my 20-minute entry here, right? So as you can see here, this was my entry, right? So I immediately start thinking and then calculating different things. I'm trying to find out if there's a TL or something that can stop me, right? or a significant SNR level where maybe I can make the target around the daily range, because I know that this thing is going to move around that much every day. It moves around 300, 300 pip. Sometimes, maybe 200, 280, maybe sometimes 330, 320, but average is 300 pip. So I want to see that around 300 target from top to bottom. Do I have an email, a trend line, or maybe SNR level or something, right? So let's go and take a look at the weekly chart and see what happens. So weekly chart I see, and then the price is dropping here, right? Very nice chart. And by the way, when it was here, I made the chart that we're going to be coming down here. So we are coming down. So this is a big number, 98.45. But just before that was also 98.95, right? And then those numbers were higher than that. So the immediate number, not immediate, but the next number to the downside was 98.95, which is around. Let's figure out how much from top to bottom. Now, the 24-hour day. See this white dotted line? This is the line that shows that the day starts and the day end here, right? And the new day started right from here. So when the day started, it went up a little bit and then it started to come down. So from the top, I'm going to measure where the 300 pip will come. And then around that daily range, do I have any SNR level, which is the most important one I see is 98.95. That's the closest one to the downside. So let's take a look at the daily range first. Here I'm going to measure from the top, and then what do we need? We need 300 pip. So if we notice that this white line is around 300 pip, 290 pip, right? That's what it is. So I draw this white line here. Now I know that this is where the daily range is going to be finished. So it might go all the way down and finish the daily range, because that's what this indicator is telling me. But where is that level that shows here? And that could be a danger, and we might bounce from there, right? 98.95. So let's go take a look and draw that number. And coincidentally, this number also comes, this white line, you see this? This is 98.95. So this number is also exactly where the 300 range completes. So this area, this zone becomes very, very good target, like a magnet, right? So this is the reason, right? The daily range and then SNR level combined, right? And a confluence type of thing. And this was my first target. We broke, and then straight to this target, this low and the SNR level and the daily range. If it would be like a Euro USD or something, I would never hold this thing. Now let's go back to my trade and see where I close. I close here, and which is the price. I usually take the picture and then immediately close the trade. So it is 98.92. This is where I close here, and this line is 98.95, and then this is even 98.87. So in between that, when it was here, I immediately closed the trade, and took the picture and then closed the trade. So now you know why I hold this trade. I held this all the way down for 190 pip, right? Similarly, let's go take a look, analyze the other trade. For example, I'm gonna go and take a look at the pound Aussie. Okay, and the pound Aussie trade is this. This is 20-minute chart, and then this is the entry here, right? And it went all the way to 145 pip. It was here, and I closed the trade. It gave me a beautiful by the book entry here as well, but I didn't take that one because I was already in here, and then some other pairs, so you don't want to be too much in the market, right? So now here, let's go take a look at this pound Aussie. Where was it? Right here, right? This is where it is. So now, see, the day started here, and then it went up a little bit, and then came down all the way, right? Okay, I was in here. Now, the first thing, again, we're going to take a look at what? Daily range. What is the daily range of this pair? 60-day average is 287. Where 287 comes in? So let's go take a look. It started here, went up. So this is the high it posted for the day. and 287 pip is way below. It's even lower. Okay, I'm gonna go from here again. 287 is 257, even below that, right? Somewhere there. Let's go 287 pip, right? So this pivot. That's it. Whatever. So now here, let me mark here. I don't know why I have this line here. Maybe SNR level 8504. Yeah, okay. So that's an SNR level, and 85. This is 8522. That's blue line. Where it is? Let's go take a look at this. This is pound Aussie. It's dropping, right? So 86 is this, 8522 is right there, and 8505 is right there. So these are the two numbers which were I was concerned about. And above that was 8636, but after that is 8504, and before that was 8522. So if you can take a look at this blue line was 8522. Now 287 pip from the top, I knew that it might go all the way down here. But again, somewhere here close by, if you have a big level which can stop the move, you have to pay attention to, right? So this is 8522 is the one. So when it was very close, and then I have to see the timing. The timing is also very important. What is the time of the day? Now around, see, this is 18, 1900, 2000 hour. That is like 3 o'clock, around 2 o'clock, 3 o'clock in the afternoon. And then, that is the time where the volume is all gone, right? And around 3, 4, 5 o'clock is dead. And then 5 o'clock, the Asian session starts again. But those timing, and that almost the day is over. So, and if you are in here or here or here, and then you're coming to that time close by, like I said, and usually around 1 or 2 o'clock New York, you should close the trade, because after that is a very big chance of retracing. So this is what the time is, and obviously my the daily range is there, so I held the trade, but the timing and this area here, 85.22. Let me go and take a look, show you this. This is exactly where I closed the trade when it was there, just above 85.22, which was the SNR level I just showed you. Even though I had the target, so I said, what the hell with it? You still, I still have 145 pips. So you have to see that, is it worth it holding and taking a chance because you are very close to a SNR level and you may bounce, right? Or is it worth it to take whatever you have and run? And if you have a decent amount of pippage and the day is almost about to over, it's 3 o'clock or 2 o'clock in the afternoon, you don't want to be in the trade after that, because it might retrace, especially when you have a big move in London session and in New York session, right? So after that, you should just take the the pippage that you have and then run, right? So this is how I held this one as well for 145 pip. I didn't close it here. It was bouncing. I didn't close because I knew that the daily range is gonna take this pair all the way down somewhere this area. So this is how. And now the same in the same manner, I hold this like something like this in Euro USD or Euro franc maybe, because they have like 90 pip, 100 pip range, right? So they don't even move 40, 150 or 200 pip in a whole day. So how can you make that much? So you have to close those pairs early. That's why in earlier I said you have to pick the pairs which you feel like more comfortable, right? Some people are just not comfortable with these pound Aussie. Some of those have the brokers have the spreads, too much spread, right? And some the speed some don't like the speed they move. Like people call pound yen is like a dragon. It's very fast and dangerous and all that. I love that pair. I move, trade that all the time. In fact, this week I had this beautiful to the upside for 130 pip, nice by the book entry, right? And same thing, I held this because based on the daily range. Let's take a look at the daily range for pound yen. How much is that? Hopefully it is clear now, showing you pound Aussie and pound Aussie already, but let me just go ahead and look at this daily range of this pound yen as well, and you will see 190, right? So I made an entry, and after that, hold the pair for 130 pip. That's make sense because it moves, almost 200 pip in a day, right? Yeah. So today, last day, actually, it's only 70 pip. 72 pip, but average is like 190, right? So for some reason, some days when it's making a turn or something, that it doesn't move that much, but usually that's an average, and you should go for that if you still have the time in the day. Time in the day is very important. For example, if the time is coming, if it is let's say 190 pip daily range, and you only travel to 45 pip, but the time is running out. For example, you are reaching to like 2 o'clock or 3 o'clock New York time, Eastern time, I would, either hold the trade for the, take a chance, or just close it because it's not going to move after that. Maybe the next day it will continue going to the downside, but that will be the next day. So you will find another entry and then get into another new trade. That's simple as that. But yeah, so the time of the day and the daily range combine, and the caution is the TL or SNR level, and try to find the confluence around the area of this daily range, and that would be your target. That should be your target. And do not close the trade early, because that's the mistake, because that is big mistake. Why? Because you have everybody, I do also, we have SL hits all the time, right? So we have to cover the losses. So for example, if you have 3 or 4 SL hit for 20 pip each, that's almost 100 pip, and then the trade that you are positive in, right, you make an entry here and then you close it here thinking that's going to drop, that's only 40, 50, 60 pip, but you already lost maybe 50, 60 pip already by hitting the SLs, right? So you have to hold your winners for the longest time, and then, like I said, the way daily range and this and that, so big movers, and then all the way 200 pip, 150 pip, something like that, so that you can cover the losses and make some, right? So if you have two SL hit in a day, maybe 40 pip, but you have three trades for 150 pip each, that's 400, more than 400 pip minus the 40, 50 pip, no big deal, right? So this is how it is. Hope this video will help. And if you have any question, just email me on myforexmagicwave@gmail.com. And this is it for now. Thanks for watching, and have a wonderful rest of the weekend, actually, not week, the weekend, right?